So, are you spending 4 to 8 hours into making a financial model? But what if I tell you you can do it in just 10 minutes? Hi and welcome to Chanakya Capital. My name is Ashika Mishra and today I'm going to be telling you two superb AI that can make your financial model that have good number of sheets in depth and is ready to use for your financial things. Now, I'm going to be using Claude for making case studies. These are the four case studies that are used by analysts in their day-to-day life. Number one is DCF valuation, M&A assertion and dilution, LBO analysis, and de-stress restructuring. So these four are actually level wise. First one is easier, second one is little bit harder, then fourth one is advanced and for experts. So, why I'm not using Claude for making the financial model? Because Claude actually takes money to make good financial model. In free plan, they do not make such good financial models that can be used. So let's see a free alternative. So number one is DCF valuation. We're going to be understanding this case study, but before that, let me just see what is my first case study. So this is first case study and I'm going to be copying it till here. And number one AI that we're going to be using is Truffle AI. Truffle AI can be used for simpler version, and because first one is simple, so we're going to just put it here. It's going to be taking some time, so till then we can understand what is this case study. This case study is about valuing a consumer goods company, and we have to make a DCF, fundamental intrinsic valuation, entry to mid-level interview. For example, you are a junior analyst at Bulge Bracket Bank and your MD hands you a task. For example, Beverage Co., a mid-size FMCG company generating 2400 crore in revenue. And these are few of the financial that needs to be seen, and these are DCF assumption. So what we have to do is build a 5-year free cash flow to firm projection. What are your year 1 to 5 unlevered financial, that is free cash flows in base case, calculate WACC, arrive at enterprise value, bridge EV to equity value per share, and what is the single biggest lever that swings the valuation the most, growth rate, WACC, or terminal margin. Run sensitivity table. So this is quite complex, and I must tell that this will take 2 hours manually. But let's see what Truffle AI is doing. It is taking its time to analyze it, and let's get back when it actually completes this and I show you what has happened. It will take at least 5 to 10 minutes. So let's come back when everything happens. So here are a few of the glimpses how it will be working. It will first analyze what your prompt is, what you want to do actually, and start building. And you can exactly see how it is building just in front of you. So it will slowly do it and complete it after thinking, processing it. It's been only just a minute that I have given this prompt, and I guess it is doing quite well in my eyes, in my experience, what I have gained in previous few years in investment banking. Let's see the end product. So I've got the output of my case study 1. If you don't remember what was case study 1, let's go again there and understand. It was DCF valuation, and it was just simply we have to build 5-year free cash flow to firm projection, calculate WACC, enterprise value. So let's see what has actually been done. So these were some of the assumption being given, and it has calculated. If you see, the calculation is being done well. Then we have WACC calculation. And yes, we have WACC, we have scenario assumption, we have projections. Let's see, 5 years? Yes, 5 years at commandant it has done. It has used in coordinate growth method. If you see, we have asked. Okay. And then we have exit model, we have DCF valuation, enterprise value, DCF exact multiple is also there. EV to equity bridge base case. See, I haven't done anything. I have just used a little Claude. And if you see, this is more like a Excel. If you see it, and it is all formula driven. So you do not have to think twice that I have to copy it or something. You just have to go there and download your Microsoft Excel, and it is here. Let me show you how it looks in Excel. See, formatting, you can ask others to do a good formatting. Here, exactly same, and there it is formula driven. Okay, this is formula driven, and you even have the reasoning and key due diligence assessment also. So yes, case study 1 is wonderfully. Let's see case study 2, that is M&A, acceleration and dilution. Again, I'm going to be copying it from here, from the scenario 1. And moving down till I see third. Let's copy it here. And we're going to be using shortcut AI. I'm just going to paste it and give it to this. Here. Sometimes, just functionalities take some time. Till then, we should understand what actually the case study is. So, case study 2 is strategic acquisition, assertion, and dilution analysis, and it is one of the most important financial model, and it is used on an, I think so, averagely much better than any other financial model. So, in an M&A deal structuring, Tech Retail Limited acquire Acquirer is a listed Indian e-commerce firm considering acquiring Logiswift Private Limited, a last mile logistics startup. The deal is being evaluated at two structure, 100% cash versus 50/50 cash stocks. You must model the assertion and dilution impact on EPS and advise the CFO on optimal deal structure. We have two deal parties and their revenues, EBITDA, net income has been given, which is very important financial metrics to see what is the synergy assumption. That is revenue synergy. Year 1 40 crore, year 2 90 crore, and third year is 150 crore. So this is kind of an assumption that we see after that M&A deal. Let's understand the questions, which is very important. Model EPS assertion, dilution under structure A. All cash funded by 1680 crore, new debt at 9% versus structure B, 50% stock and 50% debt. Show pro forma, combined net income and new share count for each. At what level of synergy does the deal break even EPS in year 1 under each structure? What is the hurdle synergy needed? So these kind of question is just not an interview kind of question. This is not the question that you have to answer to those M&A parties that want to do this deal. So these are very important. If you make this model through an AI, you have to yourself also understand how it has been derived. And if you can answer this within a day, you have a good career to go. Really, the seniors gonna appreciate you a lot. So these AI is actually a jackpot for a junior analyst, and even at a CFO level. Why not? I have a go-to strategy as a CFO to see all these by myself using AI. So human plus AI strategy is very important. You learn this before your CFO can learn it. So thirdly is calculate goodwill created in this transaction. How does goodwill impairment risk affects the deal thesis? The target promoter insists on a 20% earnout tied to EBITDA target for 2 years. How do you account for this contingent consideration on day one? Tech retail PE is 50x. Why does high PE acquirer prefer stock deals? What is the exchange ratio in deal uses 100% stock? So, if you feel these are kind of theoretical answers, but no, you have to answer this through your financial model. Let's see what is happening here. it is asking me some question. So you have to tackle this. They're going to be asking a lot. So you mentioned all input provided in this above, but I don't see any specific financial assumption for tech. Okay, so maybe somebody has forgotten to put in assumption. So let me do that. Let's copy this and give it. Again, they're gonna be this AI gonna be understanding, thinking. And to tell you about shortcut AI, you just get 30 credit per day. For the first time, you get 200 credits, and in 30 credit, I must tell you, it is more than enough to make 10 to 20 sheets in a workbook. So don't worry about that. That is gonna be taking you a lot of tokens, but it's okay. Can you share the earnout terms and curveball deals? I cannot take this anymore. Again, let's go and tell Claude this is for case study 2. Please provide the data. Done. Let's see what comes out from Claude, because Claude gonna be answering whatever case study it has given. Now Claude gonna think, and here is my answer. I just have to copy and paste. See, if you feel this is not something a real life trick, you can use Notebook LM to put all these data you have, like annual reports, presentation, and everything, and question it from Notebook LM. I have given a lot of, you know, strategies before this. I just copied it and I'm gonna paste it here. Please don't ask me any other question. I'm done with this. So yeah, of course it will take 10 to 15 minutes. I think it's just been 4 minutes with me, and it is really good that it is questioning me so that I do not miss anything. So let's come back when it has made something. So case study 2, how is it going in Shortcut AI? So Shortcut AI asks a lot of questions which Truffle Pig doesn't do it, and I love Shortcut AI for that. And I use Shortcut AI for difficult financial modeling, and for easier one I go with Truffle. See, the difference you can see here is it doesn't did any kind of formatting, but I didn't said anything to Shortcut AI and it has done good, you know, formatting, and it has made a lot of, yeah, accepted a lot of sheets. So I have my workbook and it is very presentable on first hand, but in Truffle Pig I have to go through a lot and then do formatting and everything and then present it. But in Shortcut I do not have to worry about anything. You just have to present it. And if you want a good formatting, just do one thing: make a Excel, do a little formatting what you want and upload it here, and then command uh, this Shortcut AI to make things for you, and it will follow the same formatting. Let's move and see what it comes out at the end. So this is the result of our second case study, M&A assertion and dilution model. And if you can see, it has actually done everything that we wanted: synergy, schedule, tech, retail, and logic swift. Then goodwill calculation is also being done here. Earnouts, contingent consideration, done. We have asked for two structure. If you are listening to that question, two structures were asked, and that is also done. And again, these are not just normal things, these are assumption driven. And if you want, you can just export it and it will get downloaded. So easy peasy. So break even analysis is also done here. Exchange ratios done. If you want these, if you do not understand curveball, it is very important in finance. So do go and understand it. And if you do not understand or if you do not find the right resource, do comment down. I will provide it. It is something very advanced, but you should understand it. So these are okay, let's see the third financial model, that is leverage buyout. And if you feel what is this, I have just actually said this Claude that can you make all four case study into prompts so I can copy it and paste in those AI, because I had a discussion with Claude that I'm going to be putting it into a better financial model making AIs. So it has done its work. Let's copy the third one here and go on Truffle AI, and I'm going to be making a new one. So let's go and make a new one. Truffle Pig are actually for very simple financial model, and it does not have that capacity to make really good financial model, but for the simpler ones, nobody can battle with this particular area. So till then, let's see what actually is our third case study, LBO analysis. It seems quite difficult, and it is also shown as an advanced level. We have actually used both easier version with Truffle AI and Shortcut AI, and you have seen the output, and it looks very amazing to me, honestly. Let's see what it is. Private equity buyout LBO model. We have a mid-market PE fund is evaluating the acquisition of Pharma Packaging Limited, or specialty packaging manufacturer supplying to pharma companies. If you understand LBO, LBO is a deal in which a private equity firm uses more of debt rather than equity to take over any kind of company. So the fund is targeting 5-year hold with 20 to 25 IRR. You need to build a full LBO model, stress test it, and present it an ICU memo recommendation. Entry is being negotiated at NX, EV, and EBITDA. So this any kind of deal you're going to be coming through as a finance student in an interview or an analyst in actual day-to-day work. So company deal parameters are here: LTM, EBITDA, entry, multiple, and all these are there. What we have actually to do is these questions are putting on us is build the full sources and use table, calculate the total debt at entry, equity contribution and fees, assume 2% financing fees and 1% advisory. How the fees treated, capitalized or expensed. So if you're someone who has just watched the first two case study and went out from this video, you are actually missing out a lot of learning, because if you do not understand question, if you have nothing to do with these AIs, because if you do not understand what has to be done after this, what will be the result, whatever the AI makes you, it will make no sense to you. So please understand what it is and how the results are coming out. So things are model the debt schedule with a cash sweep logic after mandatory repayments, 75% of access FCF sweep, senior debt, project aid, debt balances, interest expenses, and DSCR. DSCR is your debt service coverage ratio, convenient compliance, minimum 1.25x. So DSCR anything above 1 is good because it shows how much cash flow you have to service your debt, that is your repayment plus interest. At exit year 5, assume 8.5x EV/EBITDA exit multiple, build a exit waterfall, seen debt repayment, measure repayment, management equity pool, and then PE equity proceed and calculate MOIC IRR for PE funds. If you are not able to understand these short forms or these terms, I have actually made a video on top 5 question on PE interview. I'm going to be putting it here, so do watch that too. Run 3 scenarios. So we have 3 scenarios. The deal 48 crores, management incentive plan structure, a sweet equity at 10%. So I'm going to be putting all these case study in a link, and you can see that through description, and I'm going to be putting the prompt also there so that you can see which all prompt are used and how good are they. So let's see what Truffle is making. It is doing something really good. It has already done a lot. So let's see what exactly it is doing. So step 1, section 1 is actually the deal parameters and assumption which we have already given it. Financing structure. Senior debt multiples, senior debt amount, senior debt interest rate, mezzanine debt multiple, mezzanine debt amount. So there are three types of debt. Sorry, there are two types of debt. The financing structure goes like senior debt, mezzanine debt, and third is equity. So first you pay to your senior debt, then you pay to mezzanine debt. Mezzanine debt has much more interest rate than senior debt, and then at last it is given to equity. The end, uh, if a company ends and there is a cash left, so these are the steps how it has been repaid. So first one is senior debt, then mezzanine debt, and then your equity. Then they have fees, financing fees, exit multiple. So it does something much more than you just think of. And I guess it is doing some formatting here. Impressed. And you can see how good the financial model is. It's just being just 5 minutes given to it, and how good the output is looking. Like, we did not have time to go into the whole, but you see the IC memo recommendation is already been made thanks to Truffle. Okay. And it has almost completed everything. I'm just waiting that it's removed this yellow thing, and I understand that it has already made it, so it is taking a little bit too much of time. But it has already been made, and I have already told you how to download it. So this goes perfect, perfect. Okay, so let's come to case study 4, and it is about distressed debt and corporate restructuring, and it is for expert, that is VP level. So let me just copy this, and just this, okay, and put it here. Shortcut AI is actually really an in-depth financial modeling AI, because it takes a lot of time to make a financial model. If Truffle takes 10 minutes, I think so 5 minutes max. But Shortcut AI may take an half an hour to build it, because it takes a lot of thinking, a lot of understanding how the financial model would look like, how will be the formatting, what are the future consequences of it. It is actually like an analyst doing work with all the questions. So let's see what the actual case study is. Distressed debt and corporate restructuring. It is Infra Group Limited is a large road and port infrastructure developer that built aggressively on debt during 2015 and 2019. Post-COVID tool collection collapse, capex overrun has hit two marquee projects, and it is now in default of 9,200 crores of total finance debt across six lenders. The company has filed for protection under IBC, and you are a financial advisor to the lead lender SBI holding 3,100 crores. Build the restructuring framework, analyze scenario, and advise whether to support a resolution plan or liquidate. So I have been on project finance side. I have built a debt restructuring thing, and I am also a company secretary to, so I understand the legal side of it. These kind of financial model are really difficult, because it has to move on from single or singular assumptions. To be honest, let's see what is the debt structure. So it has a lot of types, like term loan A from SBI, then consortium banks are there, NCDs are there, ICDs are there, and these are asset recovery estimates, and there is a resolution plan also given. So what we have to do exactly, let's see. Build a full waterfall recovery model under GIP resolution plan, NCLT supervised liquidation at 35% haircut on asset, partial restructuring via OTS, one-time settlement at 5,600 crore for each, calculate recovery per credit class and recovery on face value. So SBI must decide whether to vote for and against the GIP plan at COC. To pass the plan needs 66% voting share approval. Calculate SBI voting weight. What is SBI recovery differential between plan versus liquidation? The zero coupon NCD in the plan, value them properly. GIP proposes par value at 1,200 crore due to in 7 years with no coupon, assuming a distressed yield of 14%. So these all are actually the consequences of what has happened, and each player has its own plan, but you have limited assets to pay them all. So you have to plan out that through this financial model. and it has even given the resolution timelines. So this is going to be difficult for for shortcut AI to make, and it has already a question to me. Let's just say assume everything on your own. Okay, let's give that thing to shortcut AI. Because if it has been a real scenario, I have put all my PDFs, all my resolution plan to notebook LM, and then whatever question has been asked by shortcut AI, I have put on notebook LM and see what will be the answer and copy and paste here. Okay, let's see what will be the final answer. So this is our last one, and we have to see what will be coming out. So yes, the last one, and let me show you how many sheets has been made. Assumption, waterfall recovery, NPV, NCD evaluation, contingent asset, operation credit analysis, INVIT recommendation. And I think so this is well formatted. I can present it. It is in depth, missing some graphs, maybe not commanded as well. I'm amazed. I mean, I have made few before this, but this has some really good formatting and key findings. Perfect. And nothing is like just fed in. If you have used ChatGPT and Claude a lot of time, they just provide a fed in figures, and I don't like it. So I've just found this alternative. I want to give you a personal life example. So this is what I have made. The actual force formatting, the assumption formatting, was done by me, and then it just took it from mine. And this, see this in depth, and even it has made buttons. I have three options. See, and it changes. Whether you want distro toggle on and off, you can do it. So this is the depth that shortcut AI can go. You do not need to learn too much Excel to make these kind of financial model. So if you like it, thank you so much for watching till end, and do comment down what you feel. It really helps us to improve. Thank you very much.